Hey guys, DJ from PTA going over the SPY. Few stocks to go over today. No trades for me today. Um, really just been playing the sidelines and seeing the price action and everything. I'm starting to see some interesting things happen within the SPY. I want to go over that today, as well as Nvta. We're going to go over a few other ones that made some moves on this day, and then we're going to kind of take it from there. So, guys, the SPY is rallied today, finished out very strong here on August 10th. This is a tell sign that we're starting to get over the previous area and hold. So this may be beginning of a bull trend. What I see overall fundamentally is the market is not going with the fundamentals. I was speaking to a trader the other day, and we were talking about just the overall sentiment of the market. It's like really right now, fundamentals is out the door, in my opinion. I think the market is being propped up, and it's just my opinion, but the fundamentals show that it should be going lower overall. I mean, we've had a few good things happen, CPI numbers, different things of that sort, but overall, I think that we should be going down, but we're going up. So my bias might be short, but overall, right now the market is rallying. So what we both came to the conclusion of is that fundamentals is out the door, and it's all about price action. So realistically, it's understanding the price action of the stocks or whatever ticker that you're playing is going to make the difference on whether you're successful in trading or if you're not, because everything else is out the door. So SPY finishing off strong today, hit a high at 421 in after hours. So I want to go over a few trades today that looked at promising, and a few that we did put out there. So all the people that are subscribed, are members inside our website, will receive emails in the morning of the actual trades that we're looking at, the ideas that we're looking at, so on and so forth. If you're in the Discord, you can also get that information from there. So it's one of those things where if you're paying attention, if you are subscribed like that in that matter, then you are going to get an edge. You're going to have information before everyone else. These are the things we look at early in the morning before we even place trades. So I'm going to go over a few things, in particular, my SIGA trade, as well as a few other trades, and just kind of give you an idea what things are going on. So first thing I'm going to go over is Twitter. Twitter was doing some really weird stuff, and what I mean by that is that it's kind of been popping up and going into the averages that it is. So I mean, we had this nice little gap and kind of close higher, but it didn't really give me that much price action, so I didn't add to that position on Twitter. As far as SIGA goes, SIGA was another one that I'm seeing that it wicked out, but I kind of been looking at this from a weekly aspect. So the weekly low has changed from the last time we talked. It's 2102. So let me put that down right here. So that being the low, that's kind of where I'm probably going to build a position into going into next week if this continues on or hold, but we shall see. So that's pretty much my two swing trades on the other account. As far as a winner, Nvta was the winner for the day. Nvta was just a straight shot up move. Hit a low of 183, starting to climb up higher. This had a few key areas, and let me go over those areas with you. This was definitely a key area here at 705 or $7. We just call that $7 for the sake of numbers. And then you had a big massive move here. Let's see something here at 8. I'm gonna just put that at 8. We'll just call it 860. All right. So reason being that you had it touch, touch, reject, 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 and then pushed away. So that 860 was a big area, and so on. So what I always look for is the swing high, swing lows of a stock. So if you can see here, it swung up, got rejected, swung down, swung back up, got rejected, and swung down, came back up, rejected, and swung and flush. So those were pretty much your key areas as far as your support, resistance in the off of the weekly, daily, so on and so forth. So when you're looking at these key areas, this kind of gives you an idea where stuff is. So this is where the big flush happened on the weekly. So let's change that to a different color. So let's go with this beige color or whatever. I think that's beige or pink. No, it's not pink. Go with this beige color, so we'll know that that's a weekly. So those being big areas, that was a big push there, rebound, big push, so on and so forth. Now coming down to entry day, probably would be, let's go here. I'm gonna keep that turquoise. So right here, as you see, it swung up, hit some resistance there, and then it pulled back, hit some resistance there, and then it pulled down. See, it hit here, which is this right here, was at 333, was previous month high. So that was there. Then you can use that as resistance there. So let's break it down into the actual chart. So if we go here and look at the chart, you can see this is previous month's resistance. It popped over that, pulled back, found some momentum there, and then took off. As you can see right here, we'll just call this 4, and then 435 is fine. As you can see here, this is a late day push after about 1, 2 o'clock right here. It pushed up into there, forming an A, broke down 1, 2 to support. Support was at 4. So if you're looking at this from a trading aspect, this is the pattern that you're looking for. Right there, pull down into support, right? This was a previous area breakout. So now it's telling you that, hey, I broke out this area, tight consolidation in this area, and then I return higher. So let's break that down into an actual pattern for you guys to see. So the pattern was right there off of the 1 minute. What you seen was after it broke down, it found some support, came back, found some support, came back, and then rejected. So right here was your support. When you looking at support in the stock, you want to, it's great to see it test a couple times, but sometimes you won't get that test. Other times you will. On this one particularly, you got to test twice. So it rejected here and it rejected there. When it bounced up to this line and then pulled back, it created another swing low. So this became like your C. Your entry would have been probably about right there. So you would have risked from here. You would have got in here and risked to right here, which would have been about, let's see something here, about a 10 cent, 12 cent risk. So you probably could have risked it the whole B, which was about 20 cent, and been fine. And I mean, it ripped. So the reality is how do you wait for that? Moving out to the higher time frames is where you really get to look at what's going on. So as you can see on the 30-minute, this stock continued to climb. So after here, this was the indication of buying pressure off the 30. So this 10 o'clock area is where everybody kind of started looking at it. It moved up, making higher lows, wicked out. This right here is confirmation of shorts in the trade. So if you want, you can kind of look at it like this was a supply zone. So as it started to map out and go into this zone, as it started to break out this zone, that's when you started to see, as you see, it's still making higher lows. So now you got to look for a pullback. The pullback happened between 11 and 11:30 a.m. Eastern Standard. Break that down to the 15-minute. As you can see, you have your two red candles. Those two red candles is the beginning of the pullback. Okay. So if you look at it from a 1 hour aspect, you can see the 1 hour candle pull back. Within that hour, if you go down, you will find the 15-minute. So because you didn't see it on the 30, that wasn't a full 30-minute, hour pullback. As you can see, there was still building some support. They wanted the stock to go higher. As you can see, it never touched the previous low, so it never went from green to red. As you go down to the 15-minute, you actually see the actual pullback. As I said before, you always have to wait for it to bounce. Okay, this was the pull, this was A, pullback B, it curled up. Now, where most people got active at is seeing that it went closer to weekly supports, daily supports. This was more of an intraday hold. Well, 333 acted as a hold, but that was previous month high. So that's why a lot of people probably got involved with it there. But the massive part of the move happened later in the day because you had time and factor on it. You also had everybody looking at it. It had built enough volume for the day for it to be something to look at. All those played a good factor. So what you wanted to do is allow the stock to break through. Now, sometimes it'll do it up underneath and break through. This one actually broke through on volume. So obviously it went back up to 435, 35 cents away from the 4, and then came back and respected 4. So ideally right here in this 15-minute candle, as you can see, they exhausted. The longs got exhausted here. So when we got this pullback, breaking it down into the 5-minute, when we got that pullback, you had a really strong push and then a slam. So right here is where everybody was sitting at that open price of 434. That's when they shorted right there. They pulled it down into support, which was $4. Let's go down here and see the actual number. As you can see, it never really got 401. So someone kept buying it up right there, creating a miniature support at 403. So looking at the tape right there around 403, you probably seen somebody bidding there, someone holding it up right there around 403. It bounced, pulled down, went back up again, and then it created the pattern. But now when you look at it from the 5-minute, it looks a little bit different. You see, it respected this area, exchange, went back up, pulled, and then it started to make higher lows. When you see something like that, you have to correlate that to your 1-minute to find an actual support. Support was definitely 4. Then it went down to 408, and then this was the entry right here. Now, why is that? Well, if you look at the chart very closely, you can tell that these swings, when it swung up with volume. But when it swung down, it didn't swing down with as much volume. But when it swung up, had a little bit more volume than the swing down. The volume kept in. This was a massive pull down. Now, think about this. You're looking at this from a point of, and we're just going to put this here. Make that white. And do not show the price. I just want to show this as an indicator. So as the price went up with volume. As the price swung down, relative to the volume going up and the volume going down, is lower. Now this is all on the 1-minute. It's lower. As it swings up, it's higher. So this is a swing down candle here. Let me see something here. Remove. Nope. Wrong one. Hit here. Remove. Let's go over here and put it right there. Again, we're gonna make this one white and take the numbers off. So as you can see, it swung up higher, right? And then when it was swinging down, that was lower. So it swung down, and as it swung up, this is higher than this. So this right here was the first, another indication where shorts got in at, right here, and this and right here. So these two kind of match each other, but you see they couldn't bring it down any lower, even though they increased the volume compared to the upswing volume. They couldn't get it lower. Then it went up, volumes crept in, shorts tried to swing it down. Now, this swing here, this had way more price action, but this had way more volume. So that's when the switch happened. That's when the shorts got exhausted. Because right here, this is more volume than here on the swing down. So they couldn't bring the momentum to bring it down. Then the longs took over. So this was your first indication that we're going higher. So not only did we have the pattern, we also had our first indication of when things were gonna go left. It was right here. This was the indicating candle right here. Volume increase above the previous swing, but couldn't bring the stock down. Swung up, volume here. This volume is less than this volume. That was your first red flag. So once that happened, you're just waiting for it to move the opposite way for you. Stock ramped up, got in here, 10-cent risk. Got you a nice pull. Stock pull higher, pull back, and then it just continue on for the day. Now, when you're looking at that, that's when you step out of the smaller time frame. Okay, boom, I had this pullback here. Let's look at the 5. Still making higher lows, higher lows. Right here is first time, so maybe you take some shares off there at 575, and then you reload. 15-minute, you're still making higher lows up until here, 828. So you literally could have held this on those 3 time frames for the whole duration of move for the rest of the day and got out after hours around 828. We'll just call it 830s. So you figure if you got in, let's go back to the 1 minute. You got in here. Let's just call that 420, 820, or 830. Go back here, 15-minute. Yeah, so we'll call it 830 from 420. It's a nice $4.10 move with a 10-cent risk. Now, how do you hold that long? You just play based on the previous lows. It's what we do. In that particular trade, there was, 2 opportunities to get in it. You could have got in here or you could have got in here. I would have got in here and then added to this position here and ride the wave. Great momentum, great move. Just a great play overall. Next stock we're going to go over is BCAB. BCAB was another stock that was trending. But again, looking at the higher time frames, understanding which way the stock was going makes all the difference. So Again, guys, I like to, draw out my lines. It's clearly, as you can see, this area right here was critical. Why? It bounced, it rejected right off of this area here. I'm gonna put it about right there. Right there. Rejection, pull down, rejection, pull down. So that 435, we'll just call it 430 area, was probably very critical on the chart. That 430 area there. Then I probably would put maybe this area here at 5. We'll just call that 540. So we'll go back down here to the weekly and see if it looks any different. So you a big rejection right there off of this area. So this area probably would have been closer to 520. So let's put that at 520. And paint that one white. So we know that that's the weekly. That's probably where I'll kick it at right there. So going down into the daily. Now let's go down to the 5 minutes so you can look at the chart, see the pattern. So as you can see, right off the weekly, that 520 was the area. Now, this is the reason why I draw the lines from the daily, weekly, so on and so forth. Remember, 520, 540 was all in that same area. So what we did is we got this great pop, nice little pullback. We found some support here. So your intraday support was right here. Right there in that area. Remember, intraday support we always do in purple. So that became that 480, 481. We just call that 480 because I like the whole numbers. With support, you had a bounce, rebound, and kind of went sideways for the rest of the day. But it did form a pattern here. From here up, and then you see that it's starting to squeeze. So this is where the little area was. You get in right here, break off the 520, went to 758. So that was a late day break. We looking sometime after 2 o'clock, power hour, and that's when the stock actually started to move. So if we look at this from a higher standpoint, you can really see the pattern. Let's see something here on this 30-minute. Never really broke any lows. Go down to the hour. It broke a low here. Once it got over this 510 area, started to get heavy. So let's go down here to the 1 minute. Remember, the area was 520. Let's see something here. Remember, we said that was the weekly. And then we saw that area at 510. So if we look here on the 1 minute, draw a line at 510. I'm going to paint that as green. As you can see right there where the volume kept in is the last down pull. So right there on this candle, let's go back here and draw it out. Sorry about that. Let's draw this out. So right here, if you can look closely, that down red candle was this candle right here. Okay, so it already pulled itself down here to make your support. They stepped in with volume right here. This has been the most volume in a minute. So the volume for this was right here. So remember, we got to draw this, make it white, and then we're gonna take nope, take the price off. I just want to use this as visual purposes. So this right here, this white line represent the highest point of volume for this record. So right here, we had a spike up. Shorts got in here. Pretty much went sideways with no volume. We had a volume spike right here on the downturn, which was higher than this. Volume on this is 54,000. Volume on this was 54,000, about match. So then that's the highest volume. Then we had all this low volume, and then we had a volume spike here trying to take it lower in red. And then it creeped up. Then we had a volume spike. This first volume spike here at that 520 is where everybody jumped in. Why? Because you've seen a clear indication of a shift in volume based on the previous downturn, which was here. So you got to be patient with the trade. So right there is right when it volume spiked, and correlating that it's breaking out on volume, retest, and then took off. So it's one of those things that you gotta kind of wait for and see it so that you can actually take advantage of that trade. That was BCAB. Now the next trade I'm gonna go over UPST. That hit the scanner, but I wasn't there to actually see it. Just because also it was a higher price stock, but it still had us a good move overall. A lot of choppiness, so on and so forth, but I was looking at this area right here, 3088, which is previous week high. So let's go down to the 5-minute. As you can see, right out the open, we had a slam, pull up, it finally made its A, and then it pulled away. So once it pulled back, it created support. So let's break this down to a 15-minute. You can see the two rejections. So it rejected this, which you call previous day close. So it's holding previous day close. So it marked this high, marked this low. It's trading above that area. So now when we go back down into the 1 minute, now you can start seeing the pattern. So remember, we had this choppiness, broke down, almost looked like a head and shoulders. Support, found to hear it twice. It perked up, pulled back, and then took off. So that was your entry right there. I'll go back here. It's right there. So we had our downturn, found support, bounce, pretty much the same support, bounce back up, pulled back, confirm, and then took off. Now let's look at the volume. So when we look at this volume, as you see in this period, we had all this high volume. Then right here was the first leg down on the actual volume, right there on that candle. I'm gonna put it right there. So right there was the first down on the volume. Volume kept steady, and then they spiked it again right there on that candle and pulled it down. So right there was the highest point of volume. Now, as soon as it started to reach out over this area is when it started to get interesting. Let's go here, white, do not show. So right here, big volume spike, shorts got greedy, got into it, found some support. So we starting to get some support here. It held, came back up, built in another red candle. Remember, this is your highest point. This is when they jump back in. Remember, it's higher than this area. So there's a lot of shorts in this area right here, but they couldn't bring it down lower. So even though this volume is higher than the green candle volume, they couldn't bring it down lower and break this support. So when they couldn't break that support, the next step after that would have been a shift. So it began to shift. Remember, red candle here, right there. Shift. And then you start to see that it's starting to reach out. Now, right there was the first sign of the buyers taking over. Why? Because this candle is higher than the red. This is when the shift happened. And then they confirmed it, and then it took off. So right there, right around that key area of pre-market high, volume shift took it higher. So when you see the pullback, it set up right there, right in this section here. It confirmed it here that it was going higher. That's when the volume spiked. And now it's going up higher. Playing it strictly off price action right there. We got in right here, 30s, went to 34. So the key to it all is that relationship between price and volume to better understand which way the stock is going. That was a big move. Just from there to there was $2. So that was the shift in that price on UPST. So guys, the biggest thing I want you to take away from this is really to pay attention to the actual volume and pay attention to the support and resistance areas. The stocks want to go back and support or break into some sort of resistance or area that is pivotal on the chart. This right here, this yellow line was previous day high. This orange line is previous month high. This green line is previous day close. You got the low, so on and so forth. So it's something to think about. It's something to pay attention to when you're playing your trades, to actually watch these things formulate so that you can actually get into the trade at a good time. All right, guys. If you have any questions or comments, leave them in the comment section. Hit that like button. Make sure you hit that subscribe button and share this video to all others that are into trading and want to learn and get better at their skill. And as I tell all old traders and new traders alike, stay studying and stay focused.